Hello my people, today I'll be doing a market forecast on GBPUSD, and begin this market forecast as always. We begin our market analysis on the monthly time frame, then we scale step by step to the lower time frame. So basically, looking at this monthly time frame, we can clearly see that there are certain areas of supply and certain areas of demand. Within these areas, price has been reacting from, and based on my experience and on historical data, it has been proven that demand and supply zones are most likely to be respected. That is, this is a supply zone which was created within this area. This is a supply zone which was created within this area. As price came up, we saw a reaction within this supply zone which was able to push price downward to break structure to the downside, telling us the market is bearish. We saw another retracement up which came back into this other supply zone, and we saw a lot of accumulation here within this area. But since this supply zone is on the monthly time frame, it was a probability that it will be a strong supply zone, and at the end of the day it got rejection from this area, and we saw a sell-off to the downside to break again this previous low to form another lower low, telling us that this market is still bearish based on the fact that market provided a low here, broke structure to form another lower low, which broke structure to form another lower low. What are we expecting? Based on logical terms, we're expecting price to react within here to break structure again to the downside to form a lower low. It might happen, it might not happen. And guys, remember, from price to leave from here right down to here needs a lot of patience. It means while we're on the monthly time frame, at times it might take years. So what do we do in order for us not to take a lot of years in waiting for a trade? What do? We know that basically, since price has that tendency of reacting within supply zones and demand zones, and we're able to spot a supply zone within this area, because from on the monthly time frame, and within this supply zone, price came, we saw a reaction that pulled price downward. What are we expecting? Because of that, what are we expecting? We're expecting for price to continue to sell downward to break structure to the downside, and for that to happen, price has to react within a supply zone. This is another supply zone formed on the monthly time frame, and based on the fact that this supply zone has been formed on the monthly time frame, we're expecting price to provide a reaction from this area. Price might delay, it might take its time, but at the end of the day, we're expecting price should be able to sell off and come within this level, which is the first level. And we also know there's some liquidity sitting below this level, telling us there's probability that price might sell, come down within this demand zone. So that is basically it. Since on the monthly time frame we're expecting price to sell from year to year, it means our bias on the long term is bearish, and that is, we'll be looking more of sells than buys. So based on the knowledge, we scale into the weekly time frame, and guys, looking at the weekly time frame, we can clearly see something here. Looking at the candlesticks which have been formed here, these are inverted pinball candles. These candles, if you guys understand the theory of candlestick patterns, you guys will know that when we see candlesticks forming like this, it's telling us the market, it's bearish, it might sell. And remember, all these conferences which we are seeing, the more they are happening on higher time frame, the more value they have. You understand, guys? Demand and supply zones, for example, have more value, gives us more probability of price reacting within those zones when they are formed, especially on higher time frames like weekly, monthly, or daily time frame. So since we are seeing this inverted pinball on a weekly time frame, it's telling us the probability is more higher that price might react within this zone and drop to at least here. This is our first target. So, but since it's based on that, Also, guys, remember, from the candlestick pattern, it's telling us something. Remember, this first candle closed up here. Let's identify this candle closed up here. This week closed up here. The second week closed up here, and it was the lowest point of this second week. And this third candle came in here and closed below down here. Remember, there was a break of structure. There was a change of structure here. Why? There was a change of structure here within this area, simply because there was a change of structure within this area simply because this candlestick was able to come down and take out this low to form another lower. I mean, what am I trying to mean here? The low of this candle wick is more lower than this other low, telling us market is giving us a possibility of a sell. And based on that knowledge, we carry this knowledge into the lower time frame, that is the daily time frame and the weekly and the 4-hour time frame. And guys, remember also something, guys. You guys have to also remember something at the moment. Remember, we have two possibilities here. We're expecting for buys based on our analysis on the monthly time frame, and on the weekly time frame, I'm expecting also it's sell. Sorry, on the monthly time frame, we are expecting sales. Definitely on the lower time frame, we'll be expecting also sales. Looking clearly, what are we expecting? There's a probability for price to react like this and come down, or there's another probability for price to manipulate itself again and come again into this 1 week supply zone before selling. But remember, this 1 week supply zone is still found within this 1 month. It's still found within this 1 month supply zone, telling us price might still play again within this 1 month supply zone. It might play again within this zone, yes, before selling downwards, or price might simply react from here and sell. But presently, the market is consolidating within the zone. We cannot see it at the moment because we're on the weekly time frame. If I scale down to the daily time frame, we can clearly see that the daily time frame, these are the candles here. These candles have been consolidating within this area. You understand? So basically, what are we doing? We're looking at this setup. I'm expecting price to give us a simple reaction which might happen here and give us the opportunity for an entry for us to sell downwards. Or moreover, if this zone we don't get a setup, or the setup which we get is a failed setup, we'll go further to look for a trading opportunities. We'll go further to look for trading opportunities within this 1 week zone. It means if this area gives us a setup and it fails, or if it doesn't give us a setup and price comes up, we will be able to see if we can look for another nice setup within this 1 week supply zone. Remember, this 1 week supply zone is sitting within that 1 month supply zone. And remember, an area where many supply demand zones are interconnecting is giving us higher probabilities, because smart money or the institution banks might be focusing on larger time frame, and the retail traders might be focusing on lower time frames, and we all meet together and there's a possibility for us to get entry. So I'm expecting price to give us a reaction here and we sell down, or price gives us a reaction here and we sell down. So based on that is my analysis on GBPUSD for this week. Basically, I'm bearish on GBPUSD, and I'm expecting price to come down to at least this level, either from here or from here. So guys, I'm so sorry the video was a little bit long, but I had to explain some 1 or 2 concepts. So still, thanks for the patience in watching the video to the end. I hope you guys are able to benefit from all my analysis. I do my best to explain my system, or the way I analyze the market in the most simple way. So stay tuned to my channel, comment, subscribe, like, share with friends and family. Stay safe and stay blessed. Ciao.